if you are ordering food on let's say, a food delivery app, you are not thinking about banking, right? So it really needs to serve a purpose. You don't want to be, you want to sort of have siloed sort of approaches to some of this, even though it's all in the same phone.
And the end game is that whoever has the best tech, best experience, and as much trust as possible will win. All these smaller opportunities who have gone deeper will probably be a smaller player, or if it is partnered with a smaller kind of a bank. And then over a period of time, when the value is created, when the bigger banks start seeing the value being created, they'll also participate.
This show is produced in collaboration with Ardian, a reliable end-to-end payment solution that enables businesses to turn payments into a strategic growth driver. We're also brought to you by Lulu Financial Group, a global financial services provider headquartered in Abu Dhabi and operating in 11 countries. Finally, Culturenomics with Arjun Singh is brought to you by M2P Fintech, Asia's leading payment infrastructure company that enables businesses of any scale to embed financial products. Welcome to today's episode of Culturenomics with Arjun Singh. I'm your host, Arjun, and I'm joined by Madhu and Prabhu, who are co-founders of M2P Fintech, a fintech which was established in Madras, which is now known as Chennai, or actually known as Chennai for quite a long time in India. Gentlemen, welcome. Welcome to the studio. I hope the couch is comfortable.
Perfect. Thanks,
right?
Thanks, Arjun. Thanks for having us here.
Pleasure. So we have only about 30 minutes, so I'm going to dive right in, pleasantries aside, right? I read a fairly interesting article. Well, that's not the only one I've read recently, which said the party's over for startups, fintechs included in India. Is the party really over, or is it just that the rave parties have stopped and we've moved into house parties?
Well, Arjun, I think probably the way to look at it is that, when you have a party in India, and you go overboard, the cops will come and pull the fuse out of your powertrain, right? And you the music stops, right? That's what has happened, right? But jokes aside, I think what we are seeing now is a global sort of reset around how technology companies, in a broader sort of sense, are getting priced. So there is the first wave of this correction that's happening where multiples are getting compressed. And now somewhere the pendulum has to strike back because, you can't just have it one way. When it actually sort of strikes back, we don't know to what extent it's going to sort of flow back, right? So there is going to be a reset for sure, which we are seeing. We moved from extreme greed last year to extreme fear right now, right? And somewhere that balance will sort of come in, hopefully, sooner than later.
So let me ask, there's a question, I think you mentioned something very interesting, which was there's a valuation reset. Is it a valuation reset? Well, there is definitely a valuation reset. Is it only a valuation reset, or is it actually also that the business models, the underlying business models, and the sustainable differentiation, right, is being really questioned hard?
Yeah, there are sort of nuanced perspective to this, right? One is obviously if you look at any disruption, at one level, it goes into what the profit pools are. So that's the economic side of it, of the disruption. So you might have fee income, for example, in a banking product completely disappear because a platform came in and said, I don't want to have customers paying cross-currency markup, for instance. Right?
Sure.
You make it zero. So that fee income completely disappeared, right? Does it make economic sense to run that product in a sustainable model is what is getting questioned now, right? So that's the party part of it. I think where it will reset is to saying what is that balance. So if you look at bank accounts, for instance, there is a certain payback that banks bake into because there's an acquisition cost, there is a marketing sort of aspect to it. So that payback period is cast in stone for a lot of banks, right? Fintechs went after and said, I will break that. I don't mind going for 10x of that sort of time period to break even, but I just want to grow fast so that I can say that I have this customer base and I'm taking it to a valuation multiple which nobody else can sort of catch up to. So that rationale is now kind of coming in, whereby although you might disrupt, but you'll have to do it in a meaningful manner, and there has to be a line of sight, which nobody actually questioned maybe 3 months ago.
Okay. Let me take that thought a little bit further. I'm going to take a a little bit of discretionary license here,
Yeah,
right? So my view here is I think there will be an end of the road for a lot of the fintechs, right? My fear here is that a lot of that power which was pulled out of the incumbent financial services system is going to return back into the incumbent system. Are the banks going to emerge out stronger or net winners in the short term?
It's actually, it varies by region, right? So what we see in India, for instance, the arbitrage plays are never around tech, not very much around tech, right? It's about customer experience, usability. Even at a macro, the problem solves that fintechs were doing in the West were largely foundational challenges, right? You wire money in the US, it still takes 2 or 3 days, right? But in India, that problem is no longer exists. There's no arbitrage around time, efficiency, speed, cost. So therefore, fintechs that we're solving for in India from payments, for instance, had to solve for second order effects, right? So therefore, tech being the leveler that it is, we will now have some companies that will come out stronger from the fintech side. But what has also happened and what we are seeing more pronounced is the fact that over the last 5 or 7 years, banks' innovation cycles have kind of crunched.
Okay.
So if there are, for example, when the first wave of fintech happened in India, you had the wallet story sort of that played out, right? Where Paytms and the likes kind of came out as winners. It took banks nearly 3 or 4 years to actually catch up and realize that this is not a ROI business. This is about acquiring customers, low cost and probably sort of cross-selling and building a story around
as
it,
they
right?
go ahead.
But today, if you the whole buzzword which is BNPL, we have banks, and that cycle actually in the wallet story took almost 3 or 4 years to bank to catch up, right? But in the BNPL world, we are seeing that in a year's time, right? We have practically every one of the large private banks rolling out BNPL products on our platform. So I would like to think that while a bunch of the fintechs would disappear, some of the ideas that they execute on are here to stay, and banks would lap up and sort of build on
and
it.
that's kind of my fear.
In fact, one of the most successful stories in the last 5-6 years with a similar habit changing kind of model that fintechs executed and then banks started adopting is the QR based payments in India.
Fair enough.
If you see, since it is a habit changing or a market creating kind of a play, there had to be, it initially started as a hobby project and then it became mainstream. And for it to become mainstream, there had to be a lot of VC dollars that had to be put into the ecosystem, right? So such monies, going back to your early question, such monies will be thought twice even before that money towards habit changing kind of activities are put in place. That will take time. Today in this in the overall topic that you started with, it will be thought much more deeper. Is this habit change required right now to even go through this wave and come out stronger, right? And then there are 2 or 3 parties to this game: the people who build the technology, people who actually execute, which is probably the fintechs, and then the end beneficiaries, right? Like the end beneficiaries are on the one side it is the customers, and on the other sides it's always, in India especially, it's always the regulated entities, right? So as Madhu mentioned, once the core concept of creating a product which actually solves a problem and the convenience is there and the trust is established, I think anybody who actually comes out of it unscathed can pick it up from there and start executing stronger.
Okay. So I get that. I agree with you. I understand that. You're obviously a fairly significly sized fintech
Not
startup.
where we would like to be, but yeah.
But but you're not. You weren't born yesterday, right? So, and obviously you're having to make certain hard decisions, right? Like everybody else do, right? As prudent as a business as you might have been running, more prudence is required. Let's call it that way, right? How long do I'm asking you to go into your crystal ball right now, right? What sort of, and let's talk it from an India perspective rather than sort of put a global question to it, right? How long do you see this sort of downward cycle lasting out?
Yeah.
And let me add another question. And is this a great opportunity for people or companies like you to possibly through inorganic means
Absolutely.
acquire some complementary
Absolutely.
capability. So I don't know if you could answer both of them together.
Yeah, I think the the way we look at it, and I know I keep sending out to my team every day sob story for the day for the last few weeks, right?
That's like new style of leadership.
That's right. Yeah. So this is what is happening. This is all and unfortunately we are coming from Chennai.
Can you include me on that mailing list?
Sure.
We are coming from from a city where there are only 3 weathers in a year:
Okay.
summer, hot summer, and very hot summer. Right. So the winter is actually nice, right? So people don't really associate winter with gloom, right?
Okay.
But the reality of it is, a lot of these aspects that we are going through right now, for a lot of the first generation entrepreneurs and a lot of the companies that are out there, we are seeing it for the first time, right? So we really don't know what it would mean to send 50% of your team home, right? And it takes a lot of toll, and that's not spoken about often, is the fact that the founders go through a lot of stress in terms of handling this, and you could have a lot of money in the bank. Like businesses like us, we have been fortunate. We raised a ton of capital last year. So we really don't have to worry about what's some balance in my bank. But there are a lot of businesses that don't have that luxury, right? So and fortunately for me, we speak to a lot of founders, and we see them breaking down in the sense, not literally.
But I know founders who are breaking down literally.
Yeah.
It's a hard thing.
Absolutely. Right. So therefore, and there is also a nuance to that from an India perspective, where the tailwinds in India are very different, right? So although we are one sort of global village, there are effects of what's happening in the US that kind of hits our shore as well. But India's story is still insulated to a large extent. The macros are playing out well. If the government is able to get inflation under control, the headline numbers are still, not too bad. Right? Therefore, if you actually sort of look at it, only unsustainable, heavy duty burn businesses have really taken a lot of steam. And we believe that a bunch of businesses would actually sort of be very, very strong. And that in itself will present the opportunity to actually go after and look at inorganic opportunities, because capital is going to start chasing few winners, and that's going to get chased even more.
Yeah, and
pronounced.
there's enough dry powder.
Yeah,
let's be honest. There's enough dry powder. Everything I read, there's enough dry powder. So I think it'll get more concentrated, as you said correctly. You give me a great segue. We haven't spoken about it yet. So give us the whole genesis of M2P and kind of paint a picture of how you've got to, as he said, collecting a ton of cash last year.
So the year was 2014, when Fintech was not even such a widely coined term back then. It was like banking technology and stuff. Madhu and Muthu used to be working in Visa. In fact, even before that, right? Like probably 2012, 13, they were realizing that they had a 360-degree view of the market. Each and every, the timeline that he mentioned, right? Like the overall timeline that it takes to launch a product with a bank was easily about a year and a half for any product for that matter, right? So since they had a 360-degree view of the market, and they knew that there is a big white space, how can we address that? That was the beginning of the story, right? And then all these things happened over a cup of chai, basically, right? So and then I joined, and I kind of took some different idea to Madhu and wanted him to solve the payments piece of it. And he said the payments piece itself is like a big enough piece for us to solve together, right? Yeah. And that's how it started. This was late 2014, early 2014. And then we took the plunge, started up, built the product, initial product, and went to the market. Mid of 2015, we were live.
And what was the first product you took to market?
So it was a card.
Right.
It was a Visa card, and we tried to digitize gold loan disbursements using that card.
Right.
It was a very simple product, but we wanted to kind of, at that time, the launch probably took about 8 months for us. And then we wanted that to come down to probably 6 weeks, 8 weeks, 6 weeks. And then we were questioning can we bring that down to a couple of days, right? That's where our innovation cycle started, right? How do we cut down on, resource heavy, time heavy kind of items. How can we parallel track several items? That's the thought process. That was the thought process. And then we understood that it was not the intent that was lacking with the bank. It was probably the lack of processes, lack of efficiency that the banks had to kind of derive to have such a like a cookie cutter kind of model for fintech launches, right? So we had to effectively do all the heavy lifting part for the banks, right? We went there, set up shop, understood that the operational activities are the ones which are taking time. The paperwork is the one that takes time. See how can we innovate around that. Like the tech innovation everybody can do. This is like real hard innovation. Yeah. So it's the oily and greasy stuff, not the shiny stuff, right? So that took time. Like it took easily about 6 months to 1 year for us to go set up shop with the bank. We did not want to kind of go with the the most popular banks and all. We went with banks that had the appetite to kind of launch good products in the market. So it kind of matched, right? We went with startup kind of banks with startup kind of mindset, and then took fintech startups along. And with every bank that we went to not go with just a story, right? We always went to them with a clear customer who's going to do something in the near future, right? Mm-hmm. Where the outcome is tangible, and it's not just something which everybody is just looking at some gas, right? So that was how we approached it. And then demonetization happened.
So we were just
fast forward.
Yeah. So we were just I think we in some ways we were lucky to be at the right place at the right time. Right.
Fair enough.
Some of them are some of generational companies get built because you were just there. You can't build an Uber today, right? So that opportunity is gone like 10 years ago. Likewise, we just believe that India went through this tectonic shift with respect to adopting payments, both at a macro level. Demon happened. Fintech became mainstream. A lot of companies were born, they got funded, but they were just not able to work with the bank, right? So we just figured that just being this fintech enabler is a great place to be. And nobody understood our business. So we kind of never got funded. So we worked with everybody in the ecosystem. Everybody loved us, but nobody wrote a check. So we said, this is going to be a crazy
it was too good to be true, probably.
Crazy situation to be in. And people have called, this is a lifestyle business. You can't build a multi-million-dollar company out of it. We just chugged along because we were having customers who were paying us, revenues, and we were able to pay our salaries. And then we said, why do we even have to raise capital, right?
Right.
So for 5 years, we actually, when fintech was just getting evolved into a mainstream sort of playbook, we kind of chugged along. So we started embedding banking. Even before embedded banking became a buzzword, right?
Right. Yeah. Right. So most of the keywords that you see today, fintech, embedded finance, BaaS, I mean, we were there, right, in the action even before those.
BNPL has been around 200 years, guys.
That's right.
Right. So embedded finance, right? Yeah. So there is not a day. Well, these days it's more about there's not a day where you don't hear a bad story or what's happening with crypto and Bitcoin in particular. But embedded finance, embedded payments, embedded banking, embedded fintech, whatever variant of embedded is kind of the flavor of the year, right? And a lot of people are putting some very large, chunky numbers behind it, right? This part of the world is really yet to see. I think BNPL is a bit of a poster child in embedded lending, although it gets its commentators who doesn't like it. Talk to us a little bit about, how do you see, and I'm going to now bring you into the world of MENA, right, in this region. Right. How do you actually see banking as a service or embedded banking or embedded finance really grow? And what do you really see are the catalysts which need to happen? Sure. Right? Is it all about open banking combined with technology, or is there something else in the mix?
Sure. Yeah, I mean, so it's a very deep question, right? So in the sense,
Thank God for that.
Yeah. So we have, if you really actually look back at what fintech is solving for, it's actually solving for inclusion, right? Therefore, if you look at it from that lens, if you sort of draw corollary from what's happened on the mobile side, right? Mm-hmm. What mobility has gone through is, my maid and driver and myself watch IPL on Hotstar as a platform, right? So technology is that leveler that has allowed access to people. beyond anybody's imagination, thanks to the whole data
we
revolution.
love this world called democratization.
Absolutely right. So it's embedded mobility, entertainment, if you will, right? But if you actually come to finances, because there's regulation involved, different markets have taken different approaches to regulating how financial services have played out. Like for instance, in India, RBI still believes that fintechs cannot have a party, right? So they still want them to be regulated in some form or shape, and they have to work and sit behind a bank. While the Western models have been more, sort of open about it, right? So open banking as a regulatory framework. Some of the markets in this part of the world have licenses that have been sort of carved out where you could sort of regulate some of this. There's no right or wrong answer to this.
I agree with you.
But the way we are looking at this is saying, if there's inclusion opportunity, highly likely that technology is a better solve. So you'll have more and more of regulated entities becoming product manufacturers, which is where they are good at. So you'll have a bank churning out, let's say, a $500 loan product, but they would never have the mechanics to actually distribute that product in an efficient manner to make money, right? So if on a $500 loan product, if you have even 10% margin, you're not going to make enough money by putting that out through a branch, right? So therefore, you need technology to sort of be that distribution sort of endpoint. So that's where embedded finance will evolve into. And given the fact that we are all sort of glued to our phones, there is going to be, maybe our kids' generation who would never even think of bank branches ever, right? I mean, already I've never gone to my bank branch in the last 10, 12 years, right? So there's no need for us to sort of do that. It will get consummated into the products that we sort of use and services that we sort of take, is where this is going. And that's where we believe that we have a big role to play. Right?
Yeah.
I'm just going to plug what we do in.
No, you don't have to plug, but that is the truth, right? From the
Absolutely,
technology perspective, you do. But finish, I have a question for you.
Therefore there are three aspects that will enable this. Definitely need a regulatory sort of environment to make it work, so that
In this part of the world,
Yeah.
because people
Absolutely.
like that or want that.
Absolutely.
Right.
And then you need a technology sort of infrastructure to sort of support that, right? Which is where platforms like us, or anybody for that matter, and big techs are looking at it and saying, how do I play a part in this, right? And then there's a third, which is consumers would want to love it, right? So if you are ordering food on let's say, a food delivery app, you are not thinking about banking, right? So it really needs to serve a purpose. You don't want to be, you want to sort of have siloed sort of approaches to some of this, even though it's all in the same phone. You would want your money to be handled in a more, proper, trustworthy and more serious sort of, business. So there's that, so therefore it won't be that, everybody is going to do everything. So there would be some, rational behavior that will set in. So this reset that's happening with respect to capital being available is a good way to start chopping off things that are not, non-serious.
So let me ask you a question, and guys, you can obviously take the fifth on this, because I don't expect you to have an answer, but it's a question that I grapple with in my mind all the time. So banking as a service, as you said, the West, right? We have some excellent examples in the US where the banks. I'll name a couple, Cross River Bank being one, right? Which is basically a bank which is an embedded banking player, right? And they've really embraced banking as a service. There are examples in Europe too. So we come here, right, and we look at the MENA region. Do you really see the big banks pursue a banking as a service strategy where they either partner up with technology vendors like yourself, they have their balance sheet, and they develop products which live in this digital world? Or do you actually see that opportunity with the small and medium-sized banks who are less precious about less precious about two things: A, getting disintermediated from the end customer, although the loan might still be booked under their name, and B, they realize that actually that is the price of survival, right? How do you see this playing out? Do you see the big banks, small banks all play in this space, or do you see a couple of small banks who will sort of do the whole cross-river type model?
Again, there is nuance to local market, right? So if I just go back to India, the motivations for a bank vary. For a small bank, balance sheet, fee income, I don't have to put a lot of resources. These guys are doing my, all of the heavy lifting. the retail banking head would love it, right? We're going to incrementally give him like 30-40% of his net revenues without moving a needle. But when you take it to a large bank, that few tens of $1 million is a drop in the ocean. For them, it's about partnering with the largest ed tech or the consumer tech company out there. So the motivations within the bank, even the embedded financial play, varies by what the bank is looking at. So the CEO of a large private bank would want to go out and tell his analysts that the top 3 consumer internet businesses are sort of preferring us over my competition, right? So that gives them brownie points from a stock market price standpoint. But in this market, what we realize is that the stock market pressures are not as much, right?
They're not.
And you also don't have the velocity of fintech action as yet as what we had seen in India, right? It's probably a matter of time. But I believe that because of the smaller banks getting gobbled up every now and then, it'll be the large banks that will stand out and say, let me pick the winners in this race. And if you see the recent action that has happened also, whether it's a BNPL player or a cab hailing company, it's the top 2 or 3 banks that are saying, let me partner, right? And some of the banks have also taken a charter to say, let me hive this off into a different entity so that value extraction can be more pronounced. And the balance sheet play itself can be sort of played very differently.
So I buy the balance sheet, man. I'm just going to give a counter view on this, right? And I don't think there is a right or wrong answer, as you said, and there are lots of nuances, right? If you're a non-banking player who wants to start embedding financial services or fintech into your overall customer journey or customer offering, I think you're naturally gravitated to a smaller player just because you maintain strategic control.
So that's where, Arjun, I that's the learning that we've gone through in India, right? In 2015-16, it's always the smaller banks. If you look at publicly trading banks in India, which were smaller tiered, they actually took partnership as a path to show gaining a lot of traction. And now we have the large banks. Big boys are saying we can't miss this bus. We have to be playing a role in this, right? That realization will come. Today, my reading of this market is banks are saying fintechs will have our lunch. Irrespective of that, they're going to have their lunch, right? So that's a given, right? So therefore, it has started with reluctance and denial. There's partial acceptance, and there'll be full sort of embracing that will happen hopefully in the next 2 or 3 years.
So let me take a very different view of this, right? Let's go to Web 2, right? When Microsoft said, we'll build a walled garden, and we'll whatever software we build will not be open source, right? Over a period of time, open source became much more compelling for innovators to work on.
Agreed.
How many projects did you know that was built on Wintel or a .NET kind of a code base, right? Very few. But Unix and Linux and Java and all these things, whatever were open source, really started creating an impact.
Agreed.
And then the big boys like Oracle, they acquired Sun, they acquired PeopleSoft, all the adjacent opportunities which the big boys ignored, which the smaller players started focusing. It's like whether you want to go broad or go deep, right? The smaller players went deep into every problem, solved it, kept it as open as possible, like in open source, like a GitHub, for instance. Or look at all of Microsoft acquisitions. Whatever they lost in the early 2000s or early 2010s, they kind of caught up by going inorganic, right? They acquired GitHub, they acquired LinkedIn. Whatever they lost on consumer social media, they caught up with, the corporate social media. So all these are opportunities which the smaller players will have much more zeal and, rigor to kind of go execute deeper. And then over a period of time, it will make sense for the bigger players to step in, do an inorganic M&A or, it's basically consolidation. And the end game is that whoever has the best tech, best experience, and as much trust as possible will win, right? So you now see how the game plays out, right? Like Oracle has all of, whether it's a NoSQL database or any form of database, until a certain size, a company opts for the open source version. Beyond a certain size, they go license it out and then tie up with a bigger player, right? I just took a technology, parallel to what we are talking in terms of fintech, right? All these smaller opportunities who have gone deeper will probably be a smaller player, or if it is partnered with a smaller kind of a bank. And then over a period of time, when the value is created, when the bigger banks start seeing the value being created, they'll also participate.
Okay. So let's switch gears, right? Let's talk a little bit about M2P, Fintech, as I should always add the word Fintech into it.
There's no fintech without M2P. That's why it is.
Got it. India is a huge market, and there's so much headroom to grow, right? You'll see some correction over the next few years and stuff like that. But the as you said, the waves, these are just waves, right? And the next wave will come, and the one after that. You've obviously chosen to come into the Middle East, right? And you're well established in the UAE. Obviously, you're still scaling here, and prior to our meeting here. This podcast, you were mentioning now your intentions to enter Saudi and Egypt. What's the thinking behind that? So why not just concentrate, double down on India, right? Why take up new countries, new jurisdictions, new regulations, new language? What's the thinking behind that?
Actually, I mean, when we were bootstrapped, right, we spent 5 years, and then one evening, three of us sat down and said we have sent, yeah. I think beers maybe, but the thought that we had back then was we've spent 5 years and we're not going back to a regular job, so we have to should we spend the next 10 years for a large outcome or a small outcome, right? And incidentally, if you look at banking products in general, almost 90% is cookie cutter. The credit card works exactly the same way in India, US, Indonesia, and wherever you go, right? And we also realized that a lot of the products that were getting built in India, this is 2018-19, right? We felt that they were cutting edge from how the products are rendered, and the fintech action will catch up in other markets, right?
Mm-hmm.
We saw the early signs of a Kata book, which is basically a bookkeeping product. There were 4 Kata books in Indonesia, right? Although the market was significantly smaller. We just felt the need to actually take out and export some of these ideas into other markets. And it was also a good way to go to investors and say, hey, this is not just an India story, this is because you have the scale, one city, one neighborhood could be all of UAE, right? So you can actually make an Excel sheet model of anything in India, but everybody realizes that it's an extremely price sensitive market, right? So you can build fantastic products, make zero money out of it.
Mm-hmm.
Right? So if I have to spend 20 years and build a generational company, at some point we had to sort of think about how well you can actually sort of extract value out of it, and broader sort of for the people who are all involved, how do you create value? That's when we started looking at opportunities, and we were still not sure, how we could do that. We started testing with Middle East as a market, and more particularly UAE. And we've been sort of fortunate to get some wins that gave us that confidence to say that we could actually, assemble a team here. And we had Vanati as a rock star sort of come in and,
you got to plug in Vanati there, right?
That's right. Right. And we kind of have not looked back. But interestingly enough, the market has kind of moved, at least directionally in the right way.
Mm-hmm.
And we see opportunities in Saudi, like you said, Egypt is a big market. We see Egypt playing out exactly like India.
And that's what I was going to say. Egypt is interesting because I think coming out of India, and if I may say so, your unit economics allows you to play in that market.
Absolutely.
Because I think the problem with a lot of fintechs which are from other parts of the world, right, the unit economics just does not allow them to operate.
Correct.
In markets like Egypt, right? And there are some other markets around the region. You guys will have your own strategy. So let me ask you, 5 years from now, what percentage of the top line is going to be coming out of the Middle East versus India? Do you have a view on that?
Hard to predict, but I think about 15-20% at least.
That's substantial.
Yeah. Right. We already are at about 10-12%. But Southeast Asia was a bit slow because of COVID and our inability to travel and all that. So India would be about 50-55%. And between MENA and Southeast Asia, it should be about 20.
India would still be huge. Yeah. As you said, doubling down on India is still happening. We have not lost focus on India. India will still be part of it'll be our mainstay.
It is your main.
That's where we actually manufacture. Right?
Okay.
And then all these are export markets, right?
All these are export markets, right?
But the thing is that like in cars, there is a completely knockdown kind of units, right? You add the local flavor and make sure that you put in the right regulatory pieces in place, because ours is like an a la carte of products. Some of the products you can simply like a cookie cutter, you just export. Some of the products you'll have to build specifically for the region. So
I think that's very important, right? I think because you can't just be a purely export
exactly.
model.
And it'll have to be a balance.
It'll have to be a balance. And that kind of brings me to, I guess, the last question, if I may, right? Compare and contrast. I know it's unfair in a lot of ways to compare contrast UAE versus the India, or let's take Middle East as a region. That may be a fair comparison, although it's still about 150 million people versus 1.5 billion, right? Not from a consumption perspective, but compare and contrast. What are the nuances, or what are the sort of distinct differences that you've seen here, right? Compared to India, now that you've been in the region for 2-3 years.
Sure. In fact, interestingly, just last week we were reading a Bain report, which was more internal to us, but India today is about 300 billion US in terms of payment money flow that goes through cards and whatnot. MENA as a region is about 200 billion. So if I look at MENA as a block, as a country, there are a few which are rich. There are certain pockets that are poor. So India as a agglomeration of states is exactly that, right? There are a few states that are very rich, extremely as enabled from an infrastructure standpoint on the payment side as any other part of the world. But there are poor, bunch of poor states as well. And there's a lot of money flow that happens within the country domestically as well, right? So I think the way we look at it, if I have to zoom out and sort of think of this as one block, MENA region as one block, we still think that there's a lot of runway that's there. Although, some of the places are like fairly, there isn't a problem to solve, right? So we would just be foolish enough to just say that, there's some opportunity there. But we see in pockets massive opportunities, right? Like Egypt, for instance, is humongous opportunity to actually partner with companies that are out there. Interestingly enough, we don't actually do direct consumer. And therefore it lends ourselves to actually go and partner with everyone. So in India, for instance, we are an index of digital action. By that what I mean is we would be sort of powering the best fintech out there. We would be powering the best bank-led digital bank, the best food delivery company, the best gaming company, and the best of whatever else digitally that is getting enabled. So we see the same replication happening where we have, we practically like AWS, right? The best of streaming companies actually run on AWS, right? And they also sort of go out and have a Amazon Prime, which is, is something that they are powering, right? So therefore, we believe that we would actually have in some of these markets, we may just take our own licenses to sort of operate, right? If that is what it takes to power the fintech, and that's the Solaris model, if you sort of will, right? We are still sort of scratching the surface as far as the opportunity set is concerned, but this market is like thriving with opportunities that is keeping us awake.
So last question I'm going to ask, and we both have an answer each, right?
Sure.
So I know you love all your customers, right? But give me one customer or one customer solution that you work with, which you find incredibly innovative.
Oops.
It's very hard to pick.
I think I'll probably take that first part. Maybe I'll let him sort of double click on it. What's gratifying for us, right? It goes back to that whole inclusion story.
Right.
Is the fact that our platform today is allowing financial access to a lot of people. So the India BNPL story is not about you and I
not at all
converting a big ticket, splurge into EMIs.
Or
is actually sort of bringing more people.
Or
into
my wife going and buying a dress this evening. Well, it's not Friday yet.
Yeah.
But and then putting it onto BNPL.
Right. So what has happened is in the last about couple of years, we do more lines on our platform used by fintechs than all banks put together in the country.
Right.
We are like 30% more than all banks put together, right?
Okay.
And we see that doubling by the next 12 odd months, right? So it's one company, handful of fintechs doing more than all the banks put together is phenomenal. So that's really gratifying because they are going after and addressing financial access to a lot of people who otherwise never had that access, right? And we would like to believe we would be able to replay that in this part of the world as well, right? India is a consumption credit story, so there's a lot of lending that happens. this market it could mean, how money is sort of sent out back home, right? Can we, and we partner with the best of companies that are out here.
Prabhu, do you want to add to it?
Right. Yeah. I mean, just adding to that story, it's by how are we able to create, democratize fintech, using fintech, democratize access to financial services, and how are we technologically solving it? So it's not for one customer that we are solving it. It's very hard for me to pick one. But if you see overall, our vision is to be that AWS for fintech, where every company that, let's say you have an idea, today you want to launch a server, you don't go to Amazon and talk to somebody. You go to AWS, you attach your credit card, you sign up, and off you go. You launch your instance in whichever flavor you want. Fintech should be like that.
Yeah.
And can we be that catalyst?
In fact, there's another product that I always use as an example, but thanks to COVID, it kind of got killed.
Right.
We launched a product with Ola Money for the drivers.
Exactly.
Okay, which is giving them access to that money immediately after they complete the ride.
Exactly.
Uber took out a big unit called Uber Money in US. They took this case study and said we have to implement this world over. Right. That's pretty fascinating because an idea that we sort of cooked in our office got implemented by a giant.
Absolutely.
Although the COVID made that a casualty, but some point in time it'll come back. That probably is my personal favorite. In terms of
That's interesting, and I think you look at the inclusive story, and I think there is financial inclusion opportunities in this part of the world. I see actually a bigger opportunity with what I call the underserved, and I don't. And the underserved for me is not generally or not necessarily just the poor.
Right. Absolutely not. Yeah.
If you look at the SME market out here, right, it's incredibly underserved. As in, I have this very unpopular term or sentence I use with a lot of my banking friends that we are in the UAE the most overbanked and underserved nation that I've actually come across. And I think a lot of that has to do with the relevancy. And I think this brings back to the conversation, Prabhu, that it's not always just exporting the ideas because the solve for that might be different to what you did in India.
Exactly. And in fact, if you see, there are end consumers where financial inclusion as a theme, even the governments and the state is responsible to make sure they have access. We look at fintech as our consumers, right, or as our customers. For us, even including them in an innovation story where they can partner, they have the democratized access to all the types of financial instruments where they can partner with. Creating that inclusion is where we are. We play a major role, right? So that is also equally important. You either go solve the problem on your own or empower innovators and let them solve the problems at a macro scale.
Right. Good. Well, I'd like to thank both of you.
Awesome. Yeah.
Right. Thanks for joining me.
Thank you. Thanks,
I know you're here for a couple of more days, so enjoy the weekend. I think you're here for the weekend.
Yeah.
And then we'll obviously catch up as we do. In normal course of time, right?
Absolutely.
So with that, I'd like to thank both Madhu and Prabhu, who are co-founders of M2P Fintech, who joined me this late evening on the couch. I think we had an interesting discussion. I will take away the AWS of fintech as the takeaway, and obviously financial inclusion being the mantra behind their sort of strategic North Star. With that, thank you and goodbye. Till the next episode. Bye.